Hello, everyone. Welcome to the stock-specific class here for Thursday, February the 11th. The trading that we're going to do today at the end of after we go over the specific stocks is going to be, we're going to finish up the wave characteristics. We finished up with wave number 3, talked about the characteristics of wave number 3. On Tuesday, we'll talk about the characteristics of wave 4, wave 5, and then the ABC correction, and what kind of psychologically is going on in those different phases there. So those that want to stick around after the stock-specific part, we'll go through that training. Now on Tuesday, we talked about how we were starting to get some of the warning signs. The market was getting a little extended, a little overbought, although I didn't feel like we were at an area so extreme that we couldn't continue to go higher. But we have seen kind of more of a sluggish market condition the last couple of days. And let's take a look at, first, let's take a look at the directional alerts, and we'll take a look at the charts here real quick, and then we'll get into the specific stocks. But we did kind of back off a little bit on some of these indicators. Momentum's still in the extreme range, but it's to the left side of that range, so there is still room where it could, we could still see the market go higher, and it could become even more extreme. The breadth indicator is backed off into the high range, and sentiment is in the high range as well. The buy-sell ratios, they're still pretty wide. Now they might come back, contract a little bit today. There's quite a bit of selling across the board in different sectors, and we could see some of those go back to hold. Some of the buys go back to hold. Some of the holds go to sells, and that would cause this to come closer together. Remember, all these indicators update overnight, so they're not taking into account yet what's happening today. And so I wouldn't be surprised if we see this kind of come a little bit closer together. And it can come closer together pretty quickly. We had that just real brief sell-off a couple weeks ago, and they came all the way back together again, and then we rallied off of that, and they spread out. We got overbought or got extreme here pretty quick. What that tells me is that there's a lot of stocks that are just right on that buy hold area there, and so anytime there's a little bit of a sell-off, they go back to hold, and it causes this to kind of contract. But we are pretty wide right now, so that is telling us that we're in an area here where we could see the market pull back a little bit. Sentiment backed off from, it was getting close to that extreme range, backed off a little bit yesterday. Should back off a little bit more today when that updates with the way things are kind of going. Today's been kind of a roller coaster ride. It's kind of been all over the place. But let's take a look at just a couple charts on the market indexes here. You can see we had a little bit of a bearish reversal day yesterday where we opened stronger, ended up closing lower than where we opened. The indexes at the end of the day were basically flat, but it didn't tell the whole story from the open. We had opened pretty strong and then faded. Not surprising that we're seeing weakness today off of that. Usually when you get a bearish reversal, that's why we call it a bearish reversal candle, is it's usually signaling a little bit of a bearish condition. Not surprised that we're selling off a little bit. We tried to rally a little bit earlier today. We opened higher, but we've been fading quite a bit over the last few hours. It wouldn't be shocking or surprising to have this pull back a little bit further. We might see another pullback tomorrow. Probably the first target area I would look at would be this previous high right here, which is right around that 385 area on the SPY. There's 386 right there, but it's about 385, 384, somewhere in that area there. If that doesn't hold, it could be a bigger pullback. But that, that's kind of the first area, and we're not seeing the VIX spike too much right now. So there isn't a lot of fear in the selling that's going on right now. Now that can change pretty quickly, especially if there's some news that comes out that freaks the market out a little bit. But there doesn't seem to be a lot of fear behind the selling. So I would imagine I'm kind of expecting a little bit more of a shallow pullback unless I see that VIX start to spike a little bit more. The IWM is another one we're keeping a close eye on, because the small caps, the IWM is the Russell 2000, which are the small caps. They have been the leadership stocks through the rally. The IWM has been outperforming the other indexes. We talked about how we had moved into that extreme reversal risk range on Tuesday. We had that bearish reversal candle yesterday. Now, the Russell was kind of leading the way down today. It had the biggest move down at one point, but it's also come off its lows a little bit here. So we'll be interested to see how that closes at the end of the day. You know, if it can come back up and go positive, it might mean this pullback is maybe going to be pretty shallow. But same with this, though. If it does close pretty weak, you're looking at this previous high right here as kind of a pullback area. Now that looks a little bit bigger than the SPY. And I would expect that, because if you're going to get a pullback, if it kind of led the way up, it has a little bit more to pull back on the way when it's correcting and coming down. So I would expect it to have a bigger drop as it pulls back. But that'd be the area there at about I covered it up there, about 216, 215 in that area there would be kind of where I'd expect it to pull back to. And obviously, if it breaks that, you might be in for a bigger correction. But if you see the last time the market pulled back a couple of weeks ago, the IWM didn't pull back as much. It had a much shallower pullback than the other indexes, which is why I wasn't. If you remember back then, we were doing the updates. If you listened back then, I was saying that it just didn't feel like this was going to be a bigger sell-off. There were some people claiming or saying that there was going to be a much bigger pullback or correction, and it just didn't have that feel that it was. There wasn't a lot of fear behind it. Well, there was a little bit of fear. The VIX did spike up on there, but the fear on that one was directed more towards those Reddit traders that were the short squeeze on GameStop and all that. It's been in the news. They were worried about maybe some systemic risk associated with that, but that dissipated pretty quick. That VIX came right back down pretty quickly. If we take a look at the VIX here, let me back up. You can see that the last couple of days it's come up a little bit, but it's still low. We're still really low here on the VIX, so there's really not a big concern. Now, if we start to see, the market sell off and that VIX starts moving up significantly, that will tell us there's a little bit more fear in the selling. But I don't anticipate we'll get a significant spike in the VIX unless we break those support levels. So that's why I kind of point out those support levels to keep an eye on those. So now when we have a stock specific class, and we've just got done talking about how the market is not overly extreme, but it's still a little bit overbought, and we're seeing some bearish reversals. You do have to factor that into your decisions. There's still some individual stocks out there that are good stocks. Now, keep in mind that the technique I usually go over in these updates, usually the confirmation is waiting. We're looking for stocks that currently have hold signals, 98 strength rank. And we're waiting for them to go back to a buy signal as confirmation that the trend could be continuing at that point. I think that's important to remember. Sometimes people jump to these classes, and I could mention any ticker symbol in the world, and they would run out there and go buy it without doing any research or having any other opinion, just because somebody mentioned it. It's a very dangerous way to approach the markets. I see it all the time. If you go and look at that Reddit thread, Wall Street Bets, that's been talked about in the news, that's what's kind of going on there. Somebody will mention a stock, and everyone thinks it's going to have a run like GameStop did, and people are losing a lot of money because they don't know what they're doing, and they're just chasing, and they're listening to the wrong people too. They're just chasing a pick. So it's very important that when we look at, that's why we go over market conditions before we start going over individual stocks, because you want to have see the whole picture there before you make that decision. And if we're talking about the possibility the market could pull back a little bit further, you might want to hold off on different entries into some stocks, because you might get a better entry price. And so that's part of why we're teaching this, is so you can do this analysis yourself. It can get pretty repetitive sometimes, where I talk about the same things, look at the same things, and but it's an important part of the process that you kind of look at the market conditions, and you want to match the market conditions to what you're wanting to accomplish. If the market looks like it's going to sell off or pull back, that's the time to be patient, to wait, let it pull back, because that's the prime time to get in, is after a pullback, when these stocks have come down and they're still good companies, they're likely to go back up, but you get a much better entry point into some of those trades. All right, that being said, let's go in and take a look at some of these sectors here. Let's start with the retail sector, still at the top of the list here. It's outperforming the other sectors, and there's still some good companies in this list. Under the hold section right here, I like this Kirkland's Incorporated, KIRK, 99 strength rank in this case. By the way, there's GameStop, and if you're new, I just crossed that one off. It's on the list because it made that huge run up on that short squeeze. It's come all the way back down. It was on the peak of that rally, it was a $500 stock, and it's come back to $51. You don't want to be messing around with this thing, because this thing could be, and it was probably likely to be at $10 again in the upcoming months. It just doesn't have the fundamentals right now it was never had the fundamentals to be a $500 stock. It was pure hype and pure speculation that drove that up. And the thing is this is all automated, so it made the list here, but we're not going to be considering this as a trade for now. So Kirkland's, though, I like the pattern on Kirkland's, 99 strength rank. And again, you'll see a lot of similarities here of what I'd like to look for. I like the consolidation through here. It kind of has that ABC pattern look to it. Wave A, wave B, wave C. And it just recently went back to a hold signal. Was that a buy? If this thing goes back to a buy signal, it's likely the trend is resuming. Although sometimes it can still bounce around sideways. It wouldn't be shocking if it made a run back up to the top of the range and then came back down again. Sometimes, and we'll talk about this, kind of what creates that extended sideways range. We'll talk about that when we get into the Elliott wave characteristics today. But if it does continue the trend, again, if you can take the top and bottom of the range, take that distance, and when it breaks out, a lot of times it'll go up about that same distance at a minimum. So it gives you kind of that minimum target. And so that's why this looks like there's still some good potential for upside. When you do see a trend that's been underway for a while, you do have to wonder if you're getting into the later stages of the trend. Because in studying Elliott wave these last few weeks, you know that these tend to move in cycles, and if you're getting, it doesn't mean the stock wouldn't eventually continue to go higher, but you could be getting close to the end of the 5 waves where you get a much bigger correction where it comes back down, and so you want to be but there's still some upside here based off the pattern. So this could be maybe a little bit more of a trade than instead of a longer term investment, you're just kind of trying to trade that last bit of the move there. But I like that pattern. Another one, it's a little bit lower strength rank. Moved down the list a little bit to 93 strength rank, but this Lovesac company, LOVE, is a ticker symbol. Again, kind of a similar formation. It's had a nice big run up. And you can see why the retail sector is up at the top of the list there. A lot of these stocks have these nice long uptrends that have been in place. A little bit of consolidation right through here, moving a little bit sideways. Remember what I taught you, those of you who have been with me for a little while, whenever you see a stock moving sideways, you want to pay attention to the direction or trend it was moving in before it moved sideways. That's where it's likely to go after it's done moving sideways. Not guaranteed, but likely to go. So there's if this thing goes back to a buy signal and breaks out of this range here, it's likely to continue to move higher. But similar to Kirtland, could be in the later stages of the trend, so maybe this is a little bit more of a trade than a longer term investment. All right, let's go into computer and technology. Under the hold section here. And this one at the top is a 98 strength rank, IZEA. Now this one could drop a little bit more. It's possible this is maybe your wave A, this is wave B, and it could maybe come down here a little bit further for wave C before maybe resume the trend. More than anything, I kind of put this one on the list as kind of one to keep an eye on or watch. You'd be waiting for it to go back to a buy signal anyway. But just keep in mind that this one could drop a little bit further. It could be in that kind of that C wave of the correction. We'll keep an eye on that one. I'm sure we'll probably come back to this one later on. But then there's another one in the sector there, a little bit lower strength rank. This MKTY, 94 strength rank here, mechanical technology. Now, what I like about this one is I like kind of the bowl shape. Anytime you see kind of a bowl shaped look to a trend, it's usually a pretty bullish sign. This one's pretty close to going back to a buy signal here, if I'm not mistaken. Yeah, real close. Another up day in the single, go back to a buy. But as we talk about all the time, when you have these, now this could be creating what we call a cup with handle formation, where you have kind of your cup, and then but when it gets back up to the previous high, sometimes it'll move sideways a little bit for a couple weeks, create a little bit of a handle. So this might be one that don't be shocked if it does go up in the near term. Maybe you just have to gives you the buy signal, but maybe it consolidates for a little while before breaking out. But what we like about these patterns, though, is when they do break out, when you finally break out above the top of the bowl, is there's a tendency for it to go up about the same distance as the top of the bowl to the bottom of the bowl. So you can get these really big moves sometimes off these bowl-shaped patterns. But I just want to point that out. You might have to be a little bit patient, because sometimes you'll consolidate at that previous high when it gets up to here. And if you wanted to wait, you could wait. You could just keep it in a watch list, and even if it does go to a buy signal, you could just wait for it to wait till it breaks out to buy it. Again, you have that potential for a pretty big move. Now, again, that's a rule of thumb when I talk about that top of the bowl, the bottom of the bowl projected from the breakout. Doesn't mean it has to go that far. It could go further. It could go a little bit shorter than that. But like I tell you every week, it at least gives you something you can focus on to help you stay in the trade. When you kind of have an idea of a destination or a target where you expect the stock to get to, it's a lot easier to manage, a lot easier to stay in the trade. All right, a couple more here under the auto section. Move down the list a little bit here. This will be a familiar name to many of you, but I like Tesla right here, 93 strength rank. But I like the consolidation. It's been moving kind of sideways here. Now, the reason why I say that this stock has a very high probability of breaking out and going higher again is if you look back over the history of charts, you go back at any stock or even the indexes, very rarely do you see a trend reversal happen where the stock moves sideways and then drops. I call these volcano tops because it looks like the top of a volcano, when it's all said and done, when it comes back down. But these are very rare. They don't happen very often. And so anytime you see a trend that's been going up, it'd be very rare for Tesla to come all the way back down and create that volcano top. Now, that being said, it doesn't mean that it has to break out and have a huge breakout move higher. It could rally back up, barely break out, and then reverse, and you'd have a little bit more of that pointy top. But usually big trend reversals tend to have a pointy top to them, some sort of pointy top. I mean, you could have it move sideways for a couple of days and then drop. But there's a pretty high probability that this is going to eventually break out to another new high before going through a bigger correction. Now, does that mean it still couldn't pull back a little bit further in the near term? Maybe it comes down into this area here and then rallies back up. No, in the near term, you could still have some downside there. But if you're willing to hold it and be patient, you should at least get that breakout move before a bigger correction take place. Now, Tesla's due for a bigger correction. It's had a tremendous run. But you can see back here, same thing. It had a big run up before this, and then it moved sideways for a really long period of time, several months. But it was less likely to come all the way back down off of that move. It ended up with a pretty big run since then. But I don't know. I don't think it's had that same run again. But it should end up breaking out of this consolidation and moving higher. I like a lot of the electronic vehicle stocks, at least in the near term. They look pretty good. Even under the buy, if you go into buys, I don't go into buys a lot of times in these updates because some of these stocks are in these big run-ups. They're usually the reason why I like to go to the holds is because a lot of times when stocks are in the holds and they're in these high strength ranks, they're the high strength rank stocks. Usually they've gone to hold because they pulled back a little bit. And so I like to buy them when they pull back a little bit and then catch them when they start running again. When you're in the buy section here, and you can go through the buys and find out, the problem is that it's going to be harder to find stocks that have pulled back, because a lot of times you're going to find these stocks that are already in these moves. They're up here somewhere. And I'm not saying you can't buy into a strong move, but a lot of times when you can see a strong move is already underway, chances are you're probably getting a little bit closer to the end of that move. It's probably closer to going into a correction than extending that move. So it's a little bit riskier to buy in when it's already running. And so some of these stocks, they're already running. But if you want to go through the list, I went through the list briefly here. And NEO is a good stock. I like this setup here. It's in a consolidation right now. So, and it went back to a buy signal, but it's still in an area where I'd consider buying it because you've had this kind of sideways move here, and it looks like it's getting ready to go higher again. Another stock in this list, which will actually go back to the hold section tomorrow when it updates, though, is this, let's see, where's it at? Oh, wait, I went into the hold. So I was used to going into the hold section. I went to the hold section, go to the buy section here. This Solo, SOLO, it's a 90 strength rank right now, but it has this, and it went back to a hold today with this little drop, but I just like it's kind of creating that little bit of a bowl-shaped move. And now I you have to watch this a little bit here. I don't want it to really go below to a lower low, so I really don't want it to break that range. It's a pretty big down day today. So, but if you're waiting for that to go back to a buy anyway for confirmation, but there's some of these that are forming that kind of bullshit. There's a lot of these electric vehicle stocks that are forming these kind of bull-shaped moves, and so I'm anticipating that they're going to have a run here before all is said and done. So keep an eye on some of those. Lastly, let's grab one out of the industrial products, the hold section here, and it says Plug Power, 98 strength rank. Now we've brought this one up before. I think I think I brought it up in an update back in this area right here, late December, early January. One of those updates, I think it was. It might have been a little bit further back. I can't remember when but it had this big run up right here. It's since consolidated a little bit, but again, just like Tesla, it's not likely this thing is just going to collapse and come back down, create a rare volcano top. It's probably going to end up breaking out, at least going a little bit higher before maybe correcting at that point. We'll see. All right, that wraps up the specific stocks. Let's get into the training. And real quickly, for those that, I would recommend going back and reviewing Tuesday's update to get the characteristics, the earlier characteristics we went over. But what we talked about on Tuesday was the characteristics of a bottom. When you're at a major bottom or a bottom of the stock, what are some of the psychological characteristics that you would see? We talked about a market in general, big picture. We talked about individual stocks, what you'd like to see in those conditions. We talked about what a wave one would feel like, wave two, and we finished with wave three. Wave three tends to be the most powerful wave, the strongest wave. And this is usually where you're seeing the fundamentals improve. This is where the company estimates they're going to make 5 cents a share, and they make 10 cents a share. They may estimate the next quarter they're going to make 10 cents a share, and they make 20 cents a share. Now that's kind of a ridiculous growth rate there, but the point is that you see outperformance. You see beating expectations is usually what's happening in a wave three. And that leads to wave four. What is a wave four? What are characteristics of a wave four? Well, the biggest characteristic of a wave four is a surprising disappointment. Something comes out, news, usually it's news or something like that, that may signal that the best part of the growth phase has ended. And let me give you an example of this. Let's say that company that's been growing, they said they were going to make 5 cents a share. They reported 10 cents a share. They said they were going to make 10 cents a share. They made 20 cents a share. Let's say the next quarter, they say they're going to make 30 cents a share, and they make 30 cents a share. Well, there's a tendency, particularly if you've been riding that stock for a while, there's a tendency to say, I don't understand what the big deal is. They said they're going to make 30 cents a share. They made 30 cents a share. They hit their numbers. What's wrong with that? Well, there's nothing wrong with that, except when you put it in context that they were outperforming. They were exceeding their expectations, and now they're meeting their expectations. It could be that first warning sign that the best part of the growth phase is ended. And so you got to pay attention to that, because remember, when you're in that stock, when you buy that stock, you're expecting it to go higher. That's why you own the stock. In fact, that's an important psychological thing to understand about yourself, is that the only way you're going to buy into a stock is if you believe whatever that belief is based on. You believe that stock is going to go up in value. You're never going to buy a stock at $50 a share if you know for sure it's going to go down to $40 a share. You're never going to do that. You're going to buy this stock at $50 a share because you think it's going to go to 55 to 60. Now, the reasons for thinking it could go to 55 to 60 could vary. It could be based on the fundamentals of the company. It could be based on the earnings and the earnings growth of the company. It could be because some idiot on Reddit says that he just thinks it's going to go to $60 because the planets all aligned last night, and he's an astrologer, and that's why it's going to go to $60. Well, if you believe that and you believe in his analysis, that's why you're buying the stock, is you believe it's going to go up in value, even if it's something as ridiculous as the planets aligning or something. So whatever your reason is, that's why you're going to buy it, and that's why you're going to hold it. You're going to hold it longer if you think it's going to continue to go higher. Now, the problem with that, though, is there's a tendency, and this is why understanding these psychological elements of a trend are so important, because there's a tendency for you to only see what you want to see. Now, remember, Elliott wave is based on human nature. What's a big part of human nature? It's that, we seek pleasure, we avoid pain, right? Well, what would be avoiding pain in this scenario? Well, any news that comes out that's negative, you don't want to hear it, because that means that stock could go down, which means you're going to lose money, or your profits are going to diminish. Either way, that's pain for you, right? So there's a tendency in that situation I just gave you where you're saying, well, what's the big deal? They said they're going to make 30 cents a share. They reported 30 cents a share. What's the big deal? Well, what you're doing is you're talking yourself into wanting to hold the stock or expect the stock to continue to go higher, because it would be painful if it didn't. And so there's a tendency to ignore that. And what you have to do is the opposite. You have to say, okay, I got to put this in context. They were beating their numbers. Now they're just hitting their numbers. It could be that this growth phase has ended, and I need to get out, or I need to take some profits off the table and reduce my risk exposure. Now, another thing that happens in wave 4 is, because of that surprising disappointment, there creates a conflict between the buyers and the sellers. The buyers now are maybe not as confident that the trend is going to continue. They're starting to wonder if maybe the run is over. The sellers are maybe not convinced yet that they're at the top, that they need to sell yet. And what happens is it creates a lot of times a extended sideways movement. It can be real flat, real sideways. Again, not a big drop, because the sellers aren't usually confident enough to push the price down. There's still some buyers that think it could go higher, or want to believe it's going to go higher. And you see kind of a long, extended sideways move. So anytime I see a big run up, and then I see a stock moving real sideways like this, I assume that's a wave forward. Usually that's right, because that matches the characteristics of a wave 4, this conflict. And usually, if you have a big run up, that big run up is based off of a wave 3. Now, what could be a good example of this? Well, just put up plug power again here. If I see a big run up like this, and I see a big extended sideways move like that, I assume that's a wave 4. Now, do I have to perfectly label everything that happened before? Do I have to find exactly what wave 1, wave 2, wave 3 is back here? Not always, okay? And that's why I don't want you to, I personally don't want everyone to be Elliott wave fanatics out there, where they feel like they've got to have a perfect wave count for everything. If you understand these characteristics and these tendencies, and you combine them with some good trade management, money management, that's really all you need. You don't have to have perfect wave counts every time. If I understand that this is a big run up, which is probably some sort of a wave 3, and I'm getting a sideways consolidation, there's a little bit of conflict here, And I know that Jerry said that whenever you see a stock moving sideways, you want to pay attention to the direction or trend it was moving in before it moved sideways. That's where it's likely to go after it's done moving sideways. This is probably wave 4. When it breaks out, that'll probably be wave 5. Now, wave 5 could be just a small breakout and it could correct, go into a larger ABC correction, or it could be a long extended wave 5. I don't know. I don't need to know to make money. If this thing has a small run up or a big run up, I should have a pretty high probability of making money. But that's just kind of a little thing that anytime I see a real flat sideways. Now, wave 4s don't always have to be extended sideways moves, okay? They could be just a normal correction or even a quick correction too. But most of the time, they're going to be kind of this more drawn out sideways behavior, and it's because of that conflict that's created by the surprising disappointment, okay? And it could be based on earnings. It could be, there could be a report that comes out that says that, with Tesla, there's a report that came out of China or something that I can't remember what the news was, but I just remember it was something having to do with China. And that could be explaining why there's a little bit of conflict in the trend on Tesla right now, is that that people are wondering, is that strength going to continue, or is this the end? Are we going to see a bigger correction in Tesla? And that's creating that kind of sideways move. Then that leads to wave 5. Wave 5 is the final advance. Market performance and fundamentals improve, but not to the level of wave 3. So, you say you're going to make 35 cents a share and you make 38 cents a share or something like that, or 40 cents a share. You're not doubling your earnings. The earnings growth isn't as strong as it was in wave 3, but it is improving again. It is starting to pick up again. Okay. This is also, though, where people expect things to get back to like they were in wave 3. They're kind of waiting for it to take off again because they made so much money in wave 3, or they really got hyped up getting into the stock in wave 3, and they had the wave 4 correction, and they're expecting everything to go right back to the way it was back here. It usually doesn't. So if you can pay attention to that, you can say, okay, Tesla, if it breaks out again, it's starting to move again, but pay attention to it because it probably won't have the same excitement and drive as it did back in that wave 3, and it'll seem a little bit more sluggish. And it's okay. You can still stay in the trade and ride that, but you're going to tell yourself, this is acting like we're getting near a top. We're getting near the top here. I got to watch for a strong bearish reversal of some sort to as my signal to get out or to lighten up on my trade, and you start to look for those things. Another part of this wave 5 advance that's very important is that the psychology creates overvaluation. And usually in a wave 5, and this also is now we're talking about tops as well. When you get to a major top, everyone is bullish on the stock, or everyone is bullish on the market. Now, when I say everyone, I'm talking majority, because you can always find someone that's bearish on anything, okay? But I remember a while back before Apple had its correction, it had a big run up before its last correction it had. And they had an earnings report, and everybody they were talking to was talking about how great that report was. And everyone that they were talking to was talking about how much further they felt like Apple was going to go. Oh, this Apple is going to, and at the time, it was before the stock split, they were talking about it going to $1,000 or $1,200 or something like that. I mean, they were, everyone, the only difference in the opinions was not how that Apple was going to go up, but how far it was going to go up. What analysts would say it's going to go up another 300 points or 400 points or 200 points. And I remember sitting back there, and I did an update at the time. I remember in the update saying, hey, this is what a top feels like. This is what a top on Apple would feel like. And it wasn't. It was a short time later that it went into not a huge correction. Apple doesn't have a lot of huge corrections, but it went into a decent correction. But this is where you really have to be disciplined, because there's a phrase I use all the time, and it really relates to this. When it feels safe to get in, it usually isn't. When you're getting opinions from different people about the stock you like, and it's been running or it's been popular or whatever, and everyone loves it. I mean, right now, with Tesla starting to get to that point, I mean, there's still some people that believe that Tesla's getting a little overextended, but I bet if it breaks out right here and goes higher again, you're going to get people that are going to be talking about how much further it's going to run. And you're going to find very few people that are bearish on Tesla. And when you get that or feel like you're in those conditions, that's what a top is usually feeling like. Now, as you'll notice when I'm talking about here, these things are very general. They're not exact. I'm not going to, say, well, what if it feels very bearish and the stock keeps going up high and it feels very bearish for 3 more months? Could it get really extreme? And the answer is yeah. But the key is recognizing those conditions, because then what you look for, you let it run if it's going to run for 3 or 4 months, but you start looking for the signs. You like looking for the signals, looking for that bearish reversal candle or bearish reversal pattern that starts to form. Or reducing risk exposure, taking some profits off the table, tightening up stop losses. But you kind of have to force yourself to kind of go against the crowd. Now, what's creating that? Well, remember what I said earlier. Whenever you own a stock, why are you going to buy a stock? You're going to buy a stock because you think it's going to go higher. Why are you going to continue to own a stock? You're going to continue to own a stock because you think it's going to go higher. At some point in time, everyone that wants to own the stock is going to own the stock. And again, I don't know exactly where that is going to be, but at some point, everyone that really wants to own it is going to own it, and there's going to be nobody left to drive the price higher. And but I think it's just important to just recognize that this is whenever you find anything where everyone's overly bullish, and I can't explain it. There's something to this. I see this in sports all the time. If you're into sports, have you ever seen a game where everyone is picking a certain? Well, look at the Super Bowl. Pretty much everybody picked, unless you were a Tampa Bay fan, everyone's picking the Chiefs, and for good reason. They had the best record and unstoppable offense. But whenever you see a team that everyone expects to move, very often they end up losing. And again, I can't explain. I don't know if it's I don't know if it's overconfidence. It could be part of it, but it's a funny part of human nature that whenever the crowd, so to speak, gets too far to one side, the opposite seems to happen, and that usually happens at a top. Okay. All right. So that kind of wraps up the 5 waves. Then you go into the 3-wave correction. Let me go back to the other slide here. The characteristic of wave A is the first major pullback after the 5 waves. And usually what will happen in a wave A is you'll break the trend, although not every stock in an uptrend is going to have a real clear trend line. But if you can draw a trend line on the uptrend, a lot of times that wave A will break that trend line. That's one thing I look for. When I think I'm in wave 5 is the next pullback, do we break the trend line there? But the key characteristic of wave A is that it's usually a technical breakdown. Like I said, it usually breaks the trend line. One of the key parts of a wave A is that it's usually viewed as a buying opportunity. These people have been waiting for the stock to pull back. You had the big run up in wave 3. You got maybe a little bit of a pullback for wave 4, taking off again in wave 5. Everyone's talking about the stocks. again, and you're not going to find this every stock that everyone's going to be talking about it, um, but you're waiting for that stock to pull back. You want another opportunity again. You don't want to buy it here, but you're waiting for it to pull back, and it gets this pullback right here, and you think, oh, that's a really good pullback. Usually wave A doesn't break the sentiment of the bullish sentiment of the stock, because you've had this buildup with wave 3 and then wave 5. You get a pullback right here. It's just usually, again, it's usually viewed as a buying opportunity. It hasn't broken every trader's view of the stock. Now, I'm not saying that everyone's going to view it as a buying opportunity. There's going to be some sellers. What kind of creates that move down is that there are some sellers that have gotten stronger at that point, that maybe think the trend is done and they're getting out. But I think the key thing is to remember that wave A is usually viewed as a buying opportunity. And that leads to wave B. Wave B, the main characteristic of wave B is wave B is usually called a sucker's rally. So these people that bought in on that pullback, they're buying in because they're expecting things to get back to the way they were, that wave 3 or that wave 5. They expect things to go right back to normal again. Now, one of the characteristics of wave B is that it tends to go up, but it tends to be sluggish. So it'll be more choppy. And you're kind of waiting for things to take off again. You're waiting for the stock to go again, but it's sluggish. And remember what I talked about in the stair step? I said, a lot of times when you get in your stair step here, you can sometimes tell when you're in a trend reversal, because you'll get an impulsive move up followed by an impulsive move down. Well, that's what's being created there, is that wave 1 or wave 5 up and then wave A down. Usually wave A will have those 5 waves coming down, and you'll see kind of that impulsive up, impulsive back. And then if it looks sluggish or choppy or more sideways, that's a corrective type of behavior or pattern, right? And you probably have a little bit further to drop. That's a wave. Usually wave B is that sucker's rally, or just a sluggish rally. And then wave C is the final collapse. Wave C is when you start to see the fundamentals deteriorate. You start losing hope. Each time you thought this thing was going to rally, think of the 5 waves down of wave C. You thought this was going to go right back up again. You thought this was the buying opportunity. It drops. It starts to go up again. You think, oh, there's still hope. It still can come back, and then it drops. And then, oh, still maybe some hope here, and then it drops. You're just losing hope each time, and it wears you down, and you get back all the way down to those bottoming characteristics we talked about we started talking about at the beginning of the training on Tuesday. Hopelessness, and how much further is this going to go, and when is this going to end? And it brings you down to those levels. Now, again, not every pullback is going to create absolute hopelessness. There's different degrees of it, but definitely at the end of even just a decent ABC correction, you start wondering how much further it's going to drop. It's just not looking that great. Most people will look at it as being in a downtrend at that point. You have kind of the lower highs and lower lows at that point. It's acting more like a downtrend. But again, if you can recognize the pattern and the characteristics, you can tell that you're probably getting close to a bottom, and you might start getting a rally again. The pattern might start to repeat itself. Now, I can get example probably to go off of here of kind of wave B. I'm trying to remember. I think it was this IZEA that I went over. Yeah, remember I talked how I said this probably has a little bit further to drop before going back up. Well, because you had this big run up here, you had impulsive up, you had impulsive down, and then you've been kind of moving sideways. That looks like a wave A. because that looks like a buying opportunity on that pullback. This is acting like a wave B where it's trying to move up, but it really can't. And now it's looking like it could be sliding into that wave C. Whenever you see a stock moving sideways, you want to pay attention to the direction or trend it was moving in before it moved sideways. Immediately before it moved sideways, it was moving down. That's where it's likely to go after it's done moving sideways. So we'll see if that kind of plays out that way, but that's kind of a good example of, and again, did I have to count 5 waves in this move up to analyze that? No, I was using some Elliott wave analysis here, characteristics. How's it acting? Well, this is acting right now, but it's in a correction and it probably has another move down. All right. I think, and there's one that looks like it's starting. I remember we went over Zoom video on Tuesday too. And I mean, look how it's holding. I mean, it's down. It's kind of flat today, but it's holding up pretty well with the rest of the market. Not looking the greatest, but this kind of here, this was kind of your wave A coming down. It's like there's 5 waves: wave 1, wave 2, wave 3, wave 4, wave 5. Wave A. And we have to make sure we followed the wave rules here. Wave 2 didn't go above the beginning of wave 1, so that's wave 3 isn't the shortest wave. It's longer than wave 1, so it fits that rule. Wave 4 didn't trade in the territory of wave 1, came very close, but it didn't. So that is a valid possible wave 4, and then wave 5. And then you had kind of this A, B, C for wave B. The suckers rally here, A, B, C for wave B. And this is probably wave 1, wave 2, wave 3, wave 4, wave 5 of wave C. If that's true, and this ABC correction is done, and a lot of people were turning bearish on Zoom, people were talking, I remember some of the news that was coming out down in this area here late December, early January was that, well, the vaccine's here, not as many people are going to be working from home, we're going to go back to work, and we're not going to need this technology as much. And to some extent, they're not going to use it maybe as much as they did, but it's still going to be around. And they're the leaders they're the leaders out of this pandemic of video conferencing, no doubt. Well, this could be the start of a new uptrend. Maybe that's wave 1, wave 2, and we could be maybe in wave 3. So what would I want to pay attention to if I think I'm in wave 3 of Zoom video? Well, I know that wave 3 tends to be the most powerful wave, the strongest wave, right? So that's what I'd be expecting. I'd be expecting this to start taking off. Now, what happens if Zoom suddenly rolls over and drops down? This can't be a wave 4 anymore, right? It's trading the territory of wave 1. Maybe it's dropping in below wave 2 right here. What I tell you, if it starts breaking rules, you say, well, what else could it be? What else could that be if this isn't wave 1, wave 2, and wave 3? Well, I'd have to look at the possibility that maybe this is a bearish ABC pattern. Maybe that's wave A, wave B, wave C, correcting this whole move down right here, and we've got a lot further to drop. Who knows? But at least I would know it's not acting like a wave 3, so it's probably not a wave 3. It doesn't have those characteristics I'd be expecting. So hopefully you can see how, again, Elliott wave is not the miracle cure for every trading problem you have. But you see how it could start to help you analyze, and you can make decisions off of that. If it's not acting like a wave 3, I was expecting this thing to take off. It's not acting like a wave. In fact, this is acting sluggish. Maybe that's the wave B right there. And, like I said, maybe that whole move is wave A, wave B, and we got a much bigger move down. We're really going to wipe some people out on wave C. You can use that to make decisions, tighten up stops, quit adding to the position, maybe even get out of the position. There's a lot of benefits to using this stuff along with other things, and it should always be used with other things. I'm never going to go buy Zoom video right here just because I think it's going into wave 3, or because it everyone else likes it, so and the fundamentals are improving, so it's got to be in wave 3. I'm not just going to buy it because of that. I want to see what the chart is showing me and what the candles are showing me and those things as well. You want to use it with everything else. All right. That concludes the wave characteristics. We'll see if we can do maybe a few more examples of this, kind of put everything together a little bit in the trainings next week, and then we'll wrap up the Elliott wave analysis. I'll maybe review a few things and add a few things that I might feel will be helpful for that training. Like I said, if you missed some of the earlier ones, they are recorded. You can go back and look at the previous market updates and stock-specific classes. I usually do the trainings in the second half of the class, and you can kind of get caught up that way with something. We've been doing different topics for the last several months, so there's other things that you can learn about as well. And at some point I'll start them over again once I kind of cycle through, and I'll start going over them again for those that maybe want to have a live class on it. So, all right, thanks everyone. Have a great weekend. We'll see you Tuesday for the next market update. Bye now.